Hey Glendora, I'm about to tell you how the real estate market did last month, how it's doing now, and what I expect it to do next month, and hang out to the very end for a bonus on how to get $50,000 toward your first or next purchase. Totally free, no strings attached. Let's get into it. Okay, so to start, new listings are down towards the end of the year, which is common and cyclical, as you will see from this graph over the last 5 years. They go up in the summer and down in the winter, up in the summer, down in the winter, up in the summer, down in the winter, etc. Very cyclical pattern, so no reason to be alarmed. New listings are the new listings that are hitting the market every month. Active listings are the ones that are currently on the market. So currently on the market, we have 30% more than last year. Now these numbers seem a little bit inflated because Glendora is relatively a small market. So 70 listings at the end of November versus 54 listings at the end of last November is a 30% increase, but it's really 16 more houses. Nonetheless, 16 more houses are available now than there were last year at the same time. Now we have days on market. Days on market also tends to rise cyclically towards the end of the year. This year we have a little bit of a counter-cyclical trend in Glendora only, and that could also be because Glendora is a smaller market. We have less number of homes to create these statistics, and so you could have one or two properties that sold pretty quickly, and that skews the data. Long story short, if you look at the long-term cyclical trend, you see all these spikes and valleys, peaks and valleys, right? Typically speaking, the end of the year brings more slower sales, more market time, okay? So Glendora is no exception. Properties tend to sit on the market a little bit longer towards the end of the year, and then they start to sell faster in the spring and summer. That is what we have witnessed year over year. And then months of supply. This is a long-term graph that shows you if you had stopped inputting new market and new properties on the market, if you had stopped supplying new listings to the market, how many months would it take to sell out of everything? So right now we are hovering right around 2.2 months of supply. That's pretty fast, which is good. I mean, there's good demand for houses in Glendora. You'll see the historical average back in 2008 was 12 months of supply, so that was when nothing was selling. And then ever since 2013 until now, we've been hovering somewhere between 2 and 3. And then in 2021, it went all the way down to 0.9. That's when things were flying off the shelves. The market was going nuts. And right now we're back up to about 2 months of supply. So I would call that a healthy Glendora market. Price per square foot, I love this graph because it gives me a good cross-section of the market. You'll see from 2012 until today, we have been rising consistently. If we zoom into the last 5 years, it's been on a pretty stable path of growth, with the exception of this big boom in 2022, and then a bust when the rates jumped super high, right? If you look at these rates here, this is when rates at the end of 2021 jumped from 3s all the way up to 7s in 2022, so they more than doubled. So that really slowed things down here in the second half of 2022, but then they started to normalize. As you see, mortgage rates are now hovering in around 7 plus or minus 0.5% or 1%. Basically, they're hovering between 6 and 8%, right? So right now we're in the mid to high 6s, and that has become the new normal. And so our price action has reflected that. This seems to be the new normal. We have a steady growth. Now at the end of the year, we have had a drop in price per square foot in the last month, which I would say is cyclical. I mean, if I smooth this graph out by looking at a rolling 3 months, okay, this is a 3-month average of the long term, you will see a natural and normal curvature. Towards the end of the year, there tends to be a little bit of a dip, okay, except for 2022, but there's typically a little bit of a dip towards the end of each year. Okay, it's not much, but it's there. And then if we move on to mortgage rates, You all know when we were down here and we came back up here. Now I would say this is the new normal, okay? So the last year we've gone up to 7.5, down to close to 6, back up to 7, now close to 6 3/4. I would call this the new normal, and if I had to guess on a trend, okay, I would say we had this high of 8% back in October of 2023, then a low of 6.6, we'll call it, and then a high of 7.4, and then a low of 6.15, and then a high of 7.04, and then now it's coming down. We call this lower lows and lower highs, right? So low, high, lower low, lower high. So I would say the trend is heading down. And if I were to look at the last 30 years of average bond price movements, because bond prices affect interest rate prices, I would expect bond prices to be sideways or down in the next month, which means interest rates sideways or up. Then the beginning of the year, from January to February, bond prices are typically sideways or up, which means rates are typically sideways or down. Then the big shift happens from January 31st towards the end of February. That's when bond prices typically tend to go down, which means interest rates typically tend to rise in the month of February. So between now and February, I would jump on whatever you see, because I'm not expecting rates to get much better unless there's some sort of action, some sort of big announcements. Obviously, Trump's taking office at the beginning of the year. So if he makes some huge announcements, or Powell makes some big announcements because he feels pressure from the big man, then we could see rates move. But the last and most important thing that I want to share with you right now is that I have a lender that can give you between $20,000 and $50,000 of free money. So if you're a buyer, I've got free money for you. And if you're a seller, depending on your address, I can market this for you to future buyers to encourage them to make better offers. And this lender has 3 criteria for you to qualify. FICO score over 660. Annual income of less than $295,000. However, if you're filing jointly and there's one person making less than $295,000, then we could probably work it out and make sure and figure out a way for you to qualify. And the 3rd criteria is that you can't own another property at closing. So if you own another property now, and as long as you sell it before closing, you will qualify. And if this is your first purchase, you will qualify. So the way we figure it out is by the address. If you are interested in getting $50,000, or I should say up to $50,000 for free on a property, message me right away so that I can pull the list of addresses and send you that list of properties that qualify for $20,000 to $50,000 of free money with no strings attached. Please feel free to support us on here and reach out with any questions. We would love to help you with your needs here in Glendora. God bless.